performance in the last couple of trading sessions. Thank you so much, Vermas, for joining us as always. So that's the list of mid-cap movers, some notable moves that we are seeing in the market today. Let's talk about some earnings then. Insecticides India reported a strong set of Q1 numbers. The management has guided for double-digit EBITDA margins for FY25. They're anticipating strong growth in the B2C segment as well. Rajesh Aggarwal, Managing Director of the company, is joining us now to discuss this further. Mr. Aggarwal, good afternoon. Thank you so much for joining in. You indicated in the press release that B2B and export division face challenges due to lower pricing and unfavorable market conditions. These two are around 29% of your total revenues. Can you give us a sense of what is the pricing situation right now? Has demand recovered? And going forward, do you expect some recovery in these segments?
Yeah, the market has stabilized now. And the prices I would say, they have already touched the bottom, and there are slight increase which has already started happening. So what has happened to the B2B segment is, since the prices for certain products have come down a lot, so even after doing the volumes in the international market as well as the B2B segment, they are not able to achieve their numbers. So they are trailing behind a little. But I am quite hopeful that in this year, in the complete year, they will achieve their targets and they will not trail. But yes, the B2C business is really growing, and particularly our premium segment where we are focusing, and they are the engines for our growth. So all those products are really doing very well actually, and very well accepted in the market. So since we have the major growth coming from these products, and that is the reason that our performance is showing good results.
Mr. Aggarwal, welcome to the show. One more question. You said that the B2C is going to be the engine for growth. Could you quantify how much do you expect that growth to come by as far as FY25 is concerned? And another question, last time you joined us, you said that there are quite a few products in the pipeline. In fact, you indicated around 6 to 7 new launches. You also had a tie-up with a Japanese company. Has that come on stream? Has that contributed in Q1? And, going forward, what is the kind of product pipeline do you have?
We have a very strong pipeline. I still say there are 5 more products which are in pipeline now, and they will be coming in this quarter, some products, and some products will be coming for the Rabi season, and they will be introduced also in the market. So our new products are doing very well actually in the market. So the products which are launched in the last 4 years, they have contributed more than 500 crores in B2C segment. And the products which were introduced last year, they have contributed 50 crores. And this 50 crores has come when the products were delayed in their launches. So all those products have shown very good results in Q1, and in the Q2 they will continue with the good numbers, and we should be able to show substantial increases in them. So the vision is that from our premium segment, we should show a strong double-digit growth actually. So,
okay, double-digit. Yes, go ahead, Mr. Aggarwal.
Yeah, it will be a strong double-digit growth from these premium products, and our only focus of growth is from these products actually. We call them Focus Maharatnas and Maharatnas, which have already contributed roughly about 60% in Q1, and last year contribution from 51% had increased to 59%. Our vision is that we wish to grow these products to 75% in next 3 years.
That is of the total revenues or the B2C revenues?
B2C revenues.
Okay. You indicated you're expecting 10% revenue growth and 20% volume growth in the B2C segment. I just wanted to understand, does that mean that pricing will be lower because the revenue growth expected here is lower than the volume growth? And will this volume growth be led by newer capex which is coming up? You have the Dahej plant, you're talking about more focus on premium products. Can you explain the rationale for this guidance?
Yeah, when I say that volume growth is coming, yes, the new products are supporting and they are going to the market, and of course they are leading to the volume growth. When we talk about the B2C business or the brand business, here everything works on the credit limits actually. The credit limits of the network is fixed. The staff, they have their targets, and accordingly they have to work the sales teams in the market. So sometimes when the prices go up, the volumes get a hit. But at this time when the prices are reasonable, or I would say affordable, so the volumes of the target products are going up actually, and season is also favorable because the rains, I'll not say that across the country they are very, very stable, but more or less the crop condition is overall very good, which means that this Kharif season is going to be very good. And since the dams are already started filling in most part of the country, so the expectation from Rabi season is also very good. So overall,
Mr. Aggarwal, yes, you are talking about strong growth. Just to follow up on that, when you say newer products will lead to volume growth, there's no pricing pressure that you're seeing in the B2C segment. I just want to confirm that.
prices have come down, but at the same time, the inventory prices has also come down. I mean to say my purchase price is lower. It is selling at a lower price in comparison to the previous year. But in percentage basis, the margin is not poor. It has increased year on year.
Okay. Mr. Aggarwal, okay, so now that you've spoken about margins, let's talk about EBITDA margins. EBITDA margins this year, you said that you will come at double digit. Now,
Yes.
this particular quarter, you have come close to the 11% mark, after being in single digit last year. Now, what kind of visibility do you have, and could you give us an exact number as to what exactly will be the EBITDA margin and the guidance that you can give for rest of FY25?
Exact things are very difficult to say, but I'll say that in the complete year, we'll maintain the double-digit margin. So 10.89 is something which is visible in Q1. I'll go a little cautious for Q2. Though Q2, the sales looks good. How much we are able to capture and how the things behave, that will depend on that. Because if there are floods, then there might be a different situation. And if that flood really leads to a loss or it is a small loss which gets recovered. So many factors are there. But still broadly, I am very, very sure the way I look at the season in the entire country and also in the international markets, that our EBITDA will not decline below the double-digit percentage.
Okay. Quickly, Mr. Aggarwal, if you can tell us, exports, they've been under pressure, but what is the target for this year? You had indicated 150 crores for FY24, but because of demand weakness, it came in lower. What is the FY25 guidance here?
That target will remain, will not bring down the target, because yes, there is demand. There are a lot of issues which we are facing, but I think the things should improve because the freight cost has already started coming down. Currencies issues are there in certain countries, but I think we should be able to resolve that.
Thank you so much for your time, Mr. Aggarwal, and thank you so much for joining us here at CNBC TV18. We'll now slip into a short break. The management of SP Apparels joins us next to discuss their Q1 numbers and the way forward.